All right, well, we'll go ahead and get started. 3:30 again on a Wednesday afternoon, and we are here today with another of our Survive and Thrive update webinars. So excited to discuss some recent changes and, more importantly, what you need to be doing about them. Today's topic is, or title is, Riding the Wave, and I'll go a little bit more into that in a moment, but look forward to sharing some good actionable information with you today. My name is Ryan Weissmueller. I am the president of Intrepid Solutions. We partner with primarily founder-led entrepreneurial businesses, helping them navigate the challenges as they evolve over time. And certainly with COVID, the shutdown, the reopening, reclosing, and everywhere in between, a lot of things happening on Main Street affecting that entrepreneur. So we get a very interesting bird's eye view and hope to share some insights and some best practices as a result with you here today. So as usual, for those of you who have joined us before, our agenda, we'll talk through some market updates. We'll talk through what is happening out there in the world of relief options. And there have been some updates on both the PPP and the Main Street Lending Program. And then best practices and next steps. Again, those actionable takeaways, which are really what are key. And we'll have some time for Q&A. Again, this group is usually pretty good, and I get a lot of questions throughout the course of the week. So I try to cover that in the presentation. Certainly, if we do have time, go ahead and use that Q&A bar up in the top of your Zoom window there. So let's dive in and get started. And I mentioned riding the wave. The reason for that is, I think, taking a very good evaluation at where you are on that wave. Are you on the way up? Are you on the way down? Are you in the middle of the wave waiting for it to crash? It has been a very interesting month, couple of months, just seeing some of the ebbs and flows, things sputtering a little bit, starting, stopping, etc. But I think, again, importantly, and we'll talk about this a little bit further, is just what is the impact on where you are, and really getting a good, clear picture of that, super critical. So first off, looking at the market, what's actually happening? And one thing I would say, I think I've mentioned this before in one of our past webinars, the key is avoiding the headlines as much as possible. What is the actual data telling you? And there is a lot going on. The data is certainly localized. There's opening, there's closing, there's partial reopening. And through that, businesses are getting very creative. You look at a market like California, where restaurants shut back down, but it then have shifted and really expanded outdoor dining in very creative ways. Obviously still the takeout and those kinds of things going on, but just looking at that very carefully. So there is a lot of that creativity happening. The data itself relative to COVID, and again, I'd like to touch on this just because I think it's important for a frame of reference. We try as much as possible not to get into the conjecture. Again, avoiding the headlines. Things are very politicized to one direction or the other. We try to just focus on data, share data, and there are some interesting things you can glean from that data. So certainly across the country in many of the hotspots, as well as Arizona locally where we are, cases and hospitalizations, the rate is decreasing. So had some spikes in a number of areas. That has come back down, and you can just see that clearly in the data. And if you look at the trends, that peak came and went, and it's been a pretty steady decline since then. The death rate actually today, which is another important factor that doesn't get talked about a lot, is about 25% of what it was when this really got nasty in the United States, primarily in New York. Now, a few reasons for that. Number one, doctors have a better sense on how to treat this and how to treat very ill patients. Certainly number two, are people not getting as sick that are contracting it? But that death rate has definitely gone down. The other thing that's very interesting, and this was something I would encourage you to look into, saw a fascinating map this week, and this was just focused on Maricopa County, where we're based in Phoenix, but a zip code map of what's happening with virus hotspots, and really the importance of that localized data could impact where your office is, could impact where you live, where your workforce lives, et cetera. But this is definitely, you're seeing this both across the U.S. as well as even on a more local manner. Cases are very, very dispersed, not evenly in any way, shape, or form. Certainly this virus doesn't discriminate, but very interesting to try to get some of that granular data and what it tells you. But what we are seeing is, at least in Arizona and other spots, cases are falling, which is good. Now, speaking of falling, consumer confidence dropped in July. That's not a huge surprise. Economists were expecting that, given the increase in cases we were talking about. But I think the takeaway from that again would be for you, what is the risk in your business of another shutdown, even a partial shutdown, something to evaluate, something to think about. Unemployment. Let's talk about the workforce for a moment. So the president, as probably most of you saw, signed an executive order providing some extra unemployment benefit assistance. It was not the full $600 supplement that the Democratic side was pushing for. Also not as low as what some on the right side of the aisle were pushing for. We'll see where this plays out. It could be temporary in nature and a final bill reach that actually modifies that amount. But for the time being, one key point that does mean, though, is if you recall, we talked about this in past sessions, that $600 benefit meant that certain employees were actually making more unemployment than they were working. We saw firsthand where companies were actually, in certain instances, especially some of those lower income jobs, having a hard time getting people to come back to work. So we do expect to see some movement there as a result of that change. And then also the unemployment rate has continued to decline. So now it's hovering just a little over 10% at 10.2. It peaked somewhere, I want to say somewhere in the mid 18s. So progress, but we've still got a long way to go. So it's great that that's coming down, but I will also say we are far from the finish line on this. So for those that get excited about that drop, I think that excitement has to be a little bit measured. And the other thing related to workforce is, and we've seen this certainly with lots of companies on Main Street, work locations are reopening, but there is a lot of hesitation. Companies are rolling out staggered schedules. We've also seen companies go the polar opposite. In fact, I just found out another one this morning that we know of that is offering a permanent remote work situation for employees who choose to elect it. So they don't have to go back to the office if they don't want to. They're going to be bringing people back to the office, but it's not going to be mandatory. Where that fits in, the effectiveness of all these changes, something very, very close to watch. And certainly as a lot of companies are running leaner than maybe they were 6 to 9 months ago, that effectiveness and efficiency of the workforce is going to be very important. So to see if there's some drop off there, we'd be very, very curious, and if that leads to some increased costs for businesses. And then on the lending front, certainly we are seeing this, and there's some traction. Some banks continue to be aggressive and are pursuing deals. A number of banks have quite frankly just pumped the brakes. We're also seeing M&A activity. While there is a lot of interest in deals out there, banks are being very cautious there as well. So even if the money is there on the purchase side, let's say private equity or a large buyer, the debt may not be there to complete that transaction. So still treading very, very cautiously is what we're seeing on the bank side, but there are opportunities for the right financing transactions. And one thing they are definitely doing is in some cases taking very much of a wait and see approach based on COVID. But in addition to that, really getting granular into the data. They are scrubbing monthly trends, want to understand post-COVID impact. What have things look like on a month-over-month basis the last 12 months, for example, looking at from month to month, and is what's occurring in the numbers what they expect to see. That kind of granularity, we strongly feel is going to be the norm for a while, and we're certainly seeing that in a lot of instances. And then the last piece I'll say about Main Street is we've expected this, probably will be more, but that first wave of bankruptcies, distressed sales, it's starting to occur. You're seeing it pick up a little bit. Companies that were sick coming into the COVID pandemic, many of them not surviving, many of them the PPP money has run out, and now they are basically out of options, out of liquidity. So that is occurring. We expect that to continue to occur and probably accelerate. But that creates opportunity as well. There may be some opportunities for some distressed sales, picking up some market share on the cheap. And the pivot of that is, or the flip side of that is, many companies are doing just that. So again, you may see market share snatched out from under you by a competitor coming in and buying smaller competitors and gaining market share. A lot of companies are getting aggressive and being advantageous in this market, and that is certainly something we advocate as long as the resources are there to do so. Companies continue to pivot. The other opportunity, we haven't talked about this, but it's started to occur, and now we're seeing it in real time. There's good talent out there on the market that wasn't there maybe 6-9 months ago that can be got at a reasonable price as well. So talent acquisition, definitely something to look at, because there could be some really talented people that just happen to be in an organization that got caught at the right time that could be a great addition to your team and added skill set. So let's talk about the small business side of things, and some key points to talk through today. So number one, on the PPP, and somehow with these webinars, it seems to happen this way, that information is always just hot off the press. But just yesterday with the PPP, the SBA did open their portal for forgiveness. Now, big caveat to that is the vast majority of banks, and I only know of one or two that have even basically opened anything up to their clients. The vast majority of banks are pumping the brakes and pausing. Reason being, we don't know exactly when this next round of stimulus is coming. We know a next round of stimulus is coming, and bipartisan proposals have included changes to the PPP. Forgiveness, other expansion around the PPP for some very hard-hit businesses, i.e. in the airline business, restaurants, hospitalities type companies. So changes are coming. Many banks, in fact, I believe it was Chase this morning, just announced that their portal may not open up until early September. So waiting for a shoe to drop, we would urge caution there. There's really no reason to rush forgiveness at this point. I suppose there could be a good reason, but the process is likely to change. Even if you submit an application today, you're not likely to get it done any faster anyway, because there are still unknowns. And unfortunately with this PPP, we have seen it work wonders in terms of providing some much needed liquidity, but it has just been an ever evolving process, and that is likely going to continue until the very end. So I brought up the second round of PPP, which there's some talk about for particularly hard-hit businesses. There's talk of in what we do expect is some streamlined forgiveness processes for the really small loans, potentially an automatic forgiveness. It has gotten very strong bipartisan support. And again, when you see that in this market, we usually expect that mean that some version of that's going to go through. That's certainly been the trend up to this point. But in terms of additional money being available, it may be out there. The advice we're offering is don't bank on it. If it's there, great, take advantage of it, but certainly don't count on it, because in other words, take advantage of what you've got internally. And if there is some added benefit there, great, you can explore it then. With respect to the Main Street Lending Program, so there has been, we've talked about this in the past, there has been some very slow traction, and we are actually seeing term sheets now on the Main Street Lending Program. While we have not seen any deals themselves close, I am aware of deals in other parts of the country that are in very advanced stages, if not possibly closed at this point. So the program is getting some traction. What it does appear is that the use for this program is more narrow, and again, with legislation, does some of that expand? It quite possibly could. But right now, it seems like the best fit is for a company that was very healthy, had a strong 2019, COVID hit, and will be very healthy again in the next, let's call it 12 to 18 months. The deferments and some of the things that are in the program can be attractive, but it can also get companies in trouble, and banks know that, and they're being very cautious to make sure, for example, that even though that first year all the payments are deferred, what we're seeing is they are still underwriting it as though payments are being made, and looking at that and making sure the business has adequate cash flow. So it really is a bridge in those cases. The other important point that we want to make on the MSLP as well, and we actually ran into this, had this conversation with a client earlier this week, is there was some confusion on his part. The program states somewhere between 4 and 6 times leverage, 4 and 6 times of EBITDA in terms of the total amount of debt that a company can take on, depending on which program within the MSLP you're qualifying for. But that is an up to. There is a lot of wiggle room on what banks can do, and I will tell you from what we are seeing, banks are not underwriting to those full levels. So it's another tool in their toolkit. We are still seeing them require things like guarantees, even though personal guarantees, even though the program doesn't specifically require it. And banks are using some liberty in really conforming this program to their own. So be aware of that. Just because of what you read on paper the program has to offer, that doesn't necessarily mean that is what you're going to get offered from your bank. As far as other items out there, not a lot of new updates. The EIDL, to our understanding, I believe applications have slowed a little bit. Still out there, that $150,000 max is still available. It's our understanding is it's about 50% of gross profit is where that the lesser of 50% of gross profit, or the 150,000. There is a 10K upfront advance, so if you are eligible, it's still something to pursue. There's a few reasons why you wouldn't want to, and I'm not going to get into those details on this webinar here today, but that is still out there, still an option. And then the SBA program, we've talked about this, but it is probably too late. And I would caution anyone who's being told that you can still get a loan done in time. I would either get that in writing or have some serious pause about that. But with the SBA program, that any deal closed by 9/25, September 25th, the first 6 months of payments are forgiven through the SBA. The SBA has a huge backlog of these opportunities, as you can probably imagine. I know a number of banks instituted a cutoff for submission. In fact, some of them, I believe, weeks ago even. So just tread very, very cautiously, and that would certainly not be a guarantee on anything new coming in today. And again, in terms of other aid, we do expect some significant changes with this fourth round of the stimulus. There have been a number of things that seem to have bipartisan support. There's a number of other ideas that have been suggested that we just don't know where it's going to land. So same here, don't count on it. If there is some added benefit to business, and we're certainly hoping, being the area that we serve, that there is some additional support for the small and mid-sized businesses that need it, but we're not going to operate as though that's coming. So let's talk about some key next steps, what to do. I brought this up a little bit with banks on how they're looking at things very, very granular. And that is certainly the case. And I think we talked as well about the importance of just good data overall. Now that, hopefully you have or are close to having your July numbers, that gives you May, June, July, a good quarter of information to really see what's happened coming out of some of these COVID impacts. What can you glean from that data? And one of the things that we strongly believe in is rolling quarterly numbers, and really looking at almost a rolling quarter, not a full quarter, or not a traditional calendar quarter, but just a rolling 3 months. And what can you glean from that? What are you seeing? What is your business telling you? Diving into that, you have enough history, and this does make the importance of good data and good accounting critical, because obviously if you're not capturing things in an accurate, timely manner, you could get some skewed results, or a false positive or a false negative in some cases. But really looking in those trends, evaluating those quarterlies, and then we're recommending, and we're certainly doing with a number of our clients, of revisiting that as every month goes by. So we've been working on that, for example, very recently, of capturing July numbers and updating those rolling quarterlies to see, again, what other data points can we point to? What can we learn? What can we take away from that can aid in future decision making? The second piece, and we've talked about cash. I think every one of these webinars that we've done, cash has been on the radar. No different here. And I think, again, really a nice 1-2 coming off those trends, those rolling quarter numbers, and based on what that tells you, is sales higher than expected, lower? Where did margins land? How about operating expenses? How are you able to leverage that overhead? Cash flow visibility, and having a little bit more confidence in what that looks like. Cash flowing, what we're advocating right now is cash flow to year end. Understanding it's not going to be terribly accurate. We've talked about the hurricane maps before. No different than that hurricane trapper. It may be a wide swath, but you at least have a general sense of where you're going to land depending on where things go. Understanding what your cash position is going to be at the end of 2020 is hugely critical, and something that needs to continue to be updated, because that is going to really tell you how much gas you have in the tank to be able to accomplish what you need to accomplish. And at this point, there's likely to be more uncertainty. There's likely to be more changes, but at least positioning yourself in cash really provides that buffer to be able to do that. So hugely, hugely important there. The third piece, and for a number of companies, it's been very interesting, and certainly something that we've experienced with companies that we work with, as well as just companies in general and all the market intelligence that we've been able to gather. Businesses have been impacted by this in very different ways, and the timing even has occurred in very different ways. And one thing, even at this point, the PPP money's gone, but it does not hurt to ask about options, and that could be with customers, could be with vendors. Could be with landlord, could be, still, banks for businesses that are in very dire straits that may have gone, and again, for a period of time that have a good angle to recovery, it's possible to go back. We've seen businesses do it that maybe got a 3-month deferment or 3 months of interest only with their bank and have gone back and done some more tweaking or some additional restructuring to bridge maybe a little bit longer as a result of this opening and then reclosing of the economy in some areas. So it doesn't hurt to ask, get creative, find out what's there. The caveat to that is, but don't plan on any of it. So plan on what you have available to you, what you know, the things that you absolutely can control. And if you're able to push some levers to move some of these things around, that's great. But if in order to survive, if in order to make that next sale, if in order to take a step that you're looking to step, and you have to have a few things fall in place that are outside of your control, i.e. a vendor really stretch terms for you, or a customer prepay some inventory or prepay a purchase in some regard, it just limits your options. So planning on what you have gives you the strength, and certainly if you can buy a little bit more flexibility, and we're seeing it being done out there. We are still seeing a lot of creativity in the market. It does not hurt to ask. Worst thing that can happen is you get a no. And then the last piece is just the competitive landscape. And we've talked about this, and it continues to evolve, but something very, very important. Again, going back to what we're saying with the trends, the rolling quarterly numbers, what are you noticing out of that competitive landscape? What has changed? So initially, the goal was to try to get a picture of it. Now it's looking at how is that picture evolving over time? What does that look like? And certainly what we are seeing still is there are a lot of opportunities for small and mid-sized companies because the larger competitors just are not able to move as quickly. And then on the flip side, you've got the really small players out there who maybe don't have the scale, don't have the staying power, are struggling in that regard. So where in that landscape can you leverage? Is it an opportunity maybe for some of those really small players? Is it an opportunity to pick up market share or take on some opportunities that they just can't? Is it an opportunity to be more nimble than some of the larger players? And we're seeing this a lot out there in the market, that some of the larger players are really pounding their clients for payment, because they're stretched a little bit thin. Maybe the overhead burden's too large. Maybe they've just got a big sales force that they're struggling on how to kind of rein that in and operate in this COVID and virtual environment. Could be any number of reasons, but we are seeing the little guy take market share away from the big guy. So it can be done. There's no reason why you can't. And oftentimes it's a creative offering, it's service. It's just being there as a resource, but for those small and mid-sized businesses that have the wherewithal, and again, the importance is being in a good position to be able to do this. You can't do this if you don't understand where your dad is at and feeling good about the business. You can't do this if you don't have a little bit of cash flow cushion to be able to get creative. But assuming those things are in place, there are a ton of opportunities out there that we are seeing some of the larger players, and saw some anecdotal information about this, but I expect the data is going to support it as we get further along, that a lot of larger companies, if you look at it, are going to take a larger hit through all this than that small and mid-sized business market. So we're certainly seeing it in everything that we come across. So wrapping things up, bringing it full circle, let's talk about the key takeaways, the things, if you're hopefully paying attention to any of this, these are really the things we want you walking away from here today. And number one, we've had the word "your" underlined, I think, in a number of these, but again, it is so critical to look at your business, your data, your information, your customers, because those headlines, the general statements can be dangerous, and they may hold true for your business, but they very well may not. So really getting into your numbers, what is your data telling you? Looking at that month-over-month information, and you can tell a lot. I will tell you, I had 2 separate situations in this past week that I can speak to. And one, a customer thought his business was actually performing much, much more poorly because he was looking at data in a certain way. The other actually thought business was positive. And by getting into the granularity in both cases and looking at trends, we realized the blip in the first case was so small, things were still very healthy. And in the second case, by diving into the numbers deep on a month-over-month basis, it became clear that some of the data just didn't make sense. So we dove in, sure enough, found that there was some bad information, some improper accounting in a few spots, and that it wasn't telling the accurate picture. But understanding and really leveraging that data, what it can tell you, understanding the drivers, the liquidity position, that really month over month look, get deep in those numbers. That is so essential right now, and I cannot say that enough because there is really a lot to be able to glean. Second piece, we talked about this, avoiding the headlines. The politicization certainly, politicization, I should say. Boy, I can't spit that out today. It's going to continue. You're going to see both sides, certainly as we get into closer to the election, that is going to increase. It's going to pick up. Just be cautious. Focus on the data, focusing on your business. And one other thing too, and I read a headline earlier this week about saying that they're expecting it could take even longer for a recovery to get back to the levels we were at. I've said this before, and I'll remind everyone. Even if you look on a historical basis, 2017, 2018 levels were really, really good. So if we're able to get back to that, that's not a terrible place. So just the importance, keeping things in context, looking at your business, and more importantly as well, you can read a lot of headlines, get scared, put your head in the sand, or you can focus on the opportunities that are out there in the market and how to take advantage of them because they are plentiful. So that is certainly the approach that we're advocating, and we're seeing firsthand companies do that and take advantage of that. The next piece is, and again, the importance of that data, reforecasting again. So you have that July data, you have one more month of data that you can leverage, reforecast the last 5 months of the year, and certainly to the extent you can into 2021. But reforecast what does it look like, and not just from a P&L perspective, but trying to get a sense on that cash as well. But here's the other piece that's really, really important and valuable as you go through this forecasting process, because this is really an opportunity to sharpen skills as well. Look at how your new forecast compares to the one you did prior, 1 month ago. How close were you? Where did you miss? And not only where did you miss, but why did you miss? Understanding that can really be extremely beneficial to helping make forecasting more accurate in the future. So understanding that, doing that comparison after the fact, something we are big advocates on and have seen that time and time again help companies get better at how they forecast the future. It's, we're going to do a webinar series on this, or one of our webinar topics upcoming is going to be on forecasting, but it is it's a very scary topic for a lot of companies that it really shouldn't be. It is not as hard as a lot of people make it. And, that practice can really be beneficial. So taking a look at that reforecasting, looking at the balance of the year, and then comparing and seeing where you were off, hugely valuable there. And then the last piece that we'll touch on, and this is very important as well, is margins and cash. Those are really two critical metrics that all businesses should be looking at. There may be a lot of sales opportunities out there, and maybe there is. It's not to say that there's not a reason to do a sales opportunity with low margins. Maybe it is an opportunity to free up some inventory that's sitting on your shelves. Maybe it's an opportunity to leverage some idle labor that you really can't cut. There can be good reasons for that, but in general, being very cautious, focusing just on the top line. What is flowing through to the business? What do margins look like? And then also what that does for the cash position of the company. So focusing on profit, focusing on trying to retain that profit in the business in the form of cash. What does that look like? What does that represent? Because the key here, and we've been very passionate about this, survive and thrive all along. We're seeing companies do it. We're going to see companies continue to do it. How do you position yourself to strike? Maybe it's late this year, maybe it's early 2021. But how do you put yourself in the best position possible, get healthy, get as efficient and lean and well capitalized as you can, even in this crazy environment? And by being methodical, focusing on some of these areas, it's a tried and true roadmap that can help you, and it's going to make you smarter and more successful going forward. So with that, and I apologize, we had a lot to cover today because of all the updates. So we don't really have time for any additional questions. I know I did include some of the feedback that I got over the course of this week in the presentation itself. So hope you found this valuable. Certainly we'll be back at it again in another month and see what we learn at that point. Definitely expect to have a number of very topical updates for you. In the interim, stay strong, stay safe. We'll talk soon. Take care.